political risks, regulatory and environmental risks. These are true. Africa is largely made up of, is a continent made up of developing countries. Of course, the different African countries are in different stages of development. So they cannot always be classified as one group. For example, countries like South Africa, Egypt, Nigeria, Kenya, Ghana are middle income emerging market countries that offer relative stability compared to countries like Somalia, um, uh, Congo, Central African Republic, and others. So the first way to deal with this issue is to always remember that Africa has 55 countries and that these 55 countries are classified at different stages of development. So in making real estate investments, the real estate investments are classified according to the different countries. And of course, the risk, the country risk in each of these countries is different. So for the more stable countries, the risks are lower. For the more fragile countries, the risks are higher. In trying to encourage people to do real estate business development in Africa, we try to manage these factors. First of all, by beginning with countries that are more stable and more developed markets, and then gradually we will expand into the rest of the countries. We will work on strategies such as trying to hedge the risks of the people we work with, our investors, partners, and financiers. What do we mean by hedging the risk? We try to spread our projects across different countries. Right now, we've begun with Nigeria and South Africa. We are going to soon expand into Kenya, Uganda, Tanzania, Rwanda, and all these other countries. Why do we do this? We do it deliberately. We do it then because when we are in different countries with different jurisdictions, it then exposes us to it then safeguards us from some certain levels of risk in a specific country. So for instance, if we're taking, let's say, $1 million to do property projects in Africa at the moment, if we split this money into two and invest a part of it in South African property and another part of it in Nigerian property, what then happens is that we have safeguarded or reduced the risk of the entire $1 million being subject to upheaval or challenges in each of those countries. That's one way that we reduce the levels of risk. So if there is some form of instability or issues in any of these countries, the chances of the one country affecting the other country is quite reduced. That's a way that we manage the issues of political and regulatory risk. Of course, we can go back into history to see what has been the long term impact of political and regulatory risk in Africa. And what you will find out is that whereas political and regulatory risk have short term cause short term setbacks, in the long run, Africa is still here. The countries are still here, and growth is still happening. I mean, so if you look at South Africa, for example, it has gone through its fair share of challenges. Apartheid, the struggles and riots and challenges and civil unrest that came leading up to the end of apartheid, and then post-apartheid challenges like every other country. And even prior to then, there were things like World War One, World War Two, and all manner of, sanctions because of apartheid, etc. So it's gone through its fair share of political challenges. But business has still been growing. Property has still been growing. The thing is, these challenges can have a short-term setback, but if we have a long-term view, we always find out that there is then a point of recovery and growth. So in the long run, there has actually been growth. Now, so this is why we are saying to people who are working with us, one way to manage these risks is to have a long-term view. We are not offering short-term returns, 3 months, 6 months, 1 year, that kind of stuff. Yes, there are deals here and there that might be a short-term deal. Usually short-term deals are linked to deals that have already had a history and then just need, to be closed or something like that. However, the general frame of mind we want the people that journey with us to have is a long term, is to think in the long term. That is a way that we can safeguard against some of the political and regulatory risks that we face in the environment. It's important to note that political and regulatory risks are beyond us. So there are things that are dependent on macro or external factors. All we can do is manage them, but we can have strategy to manage them in a way that doesn't hurt us. Now, one last thing I need to say is that whereas Africa has its fair share of political risks, the place where the world is today, the world has come to a stage where actually political and regulatory risks have become a global issue. I mean, we've seen developed countries just suddenly ban products from other countries. If you were an investor in a product that was banned in one developed country, you will be impacted. We've seen that in the different, we've seen cases in recent times of trade wars between developed countries that changed regulatory policies instantly. So it's not uniquely African. We've seen riots and issues and changes in government in stable countries. So the world is actually now facing risks, political risks and regulatory risks, not just uniquely African. So wherever you're doing business in the world, there is still a similar need to manage these risks. It's not just Africans that have the need to manage political and regulatory risks. It's any business owner anywhere in the world who has the responsibility to manage political and regulatory risks.